is a presentation. I've done it a few times before, and the reason why I wanted to do it again was, just because there's always new projects that are coming up in Calgary, and I still think that it's one of Canada's best opportunities currently because, unlike things that we see in the GTA, there's opportunities for cash flowing properties in a grade A type of market as well, where you can get good quality tenants. So, a little bit about myself. Oops. A little bit about myself. My name is Alex Zhvanetskiy. I'm a realtor of Remax Condos Plus. I'm also a real estate investor. I invest both in the Ontario market and in the Alberta market. And there's a QR code there. So if anybody wants to connect with me on social media, my Instagram is just basically my first name and my last name. That's my Instagram handle. So, first I want to just reiterate a few points here about real estate as an investment tool, and some of the benefits of that. And if there's any questions in the chat or anything like that, we can address it at the end after the presentation, because it's quite possible that I'm going to touch on some of these points as well. So real estate, one of the benefits about it is that when you invest in real estate, you're buying a tangible physical asset. Like, you can see the property. It's a basic human need. It's something that we're going to continue to need. There is a lot of immigration that's happening right now still into Canada, and there's a lot of interprovincial migration. And I'm going to talk about the numbers in a couple of slides, but quite a significant portion of the people that are moving into Canada, or that already live in Canada, and are move from provinces like British Columbia and Ontario into Alberta because of the more affordable real estate. So it's definitely a basic human need that makes people kind of get up and change everything about their life, including where they live and relocate. Our population continues to grow in Canada. Because of that, it is considered a fairly safe investment vehicle, especially over the last 20-30 years. And there's a lot of different strategies that come with investing in real estate. One strategy that works pretty much sure thing is the buy and hold strategy. So purchasing a property, getting a tenant in there, holding it, letting it appreciate, letting that tenant pay down your investment. And then, you have equity and you have opportunities to use that equity or, to sell and buy something else. So it's like once you have that equity, you have a lot of options available to you. So there's a few ways that we make money in real estate or a profit. So one is, a bit like I mentioned a couple of seconds ago, appreciation. So your property goes up in value. You pay down your principal, or you have your tenants pay down your principal. It's basically you're paying down the mortgage loan amount. Also cash flow, which is something that we see a lot less of right now, especially for single family properties that are like in places like Toronto. Even when you go to markets like Kitchener-Waterloo, London, Ottawa, Windsor, it's more and more challenging to find cash flowing properties. But I guess it's also about how you calculate cash flow as well, because you can calculate cash flow as just straight up rent minus expenses, but also, if you throw in that pay down of your principal into it, it becomes even more appealing. But most people don't calculate cash flow like that. It's basically like, what am I getting in rent? What are all my carrying costs? Do I have something left over? Ideally, you do want to have something left over, or you want to be as close as possible. And the reason why, investing for cash flow is so safe and has been an investment strategy that I've been utilizing for myself, and what I found that kind of happened because of that is I kept having to go to different areas because the cash flow was, further and further out of my base market, which is Toronto, is because when your property, covers itself through the rent, you can decide if you ever want to sell that property, what market you're selling it. So you can wait for a market that's more favorable to you. Something that we see right now in Toronto is there's a lot of investors that are selling investment properties, especially condos. And that's because their properties never cash flowed and interest rates went up. And now they're finding themselves in a negative cash flow situation they can't sustain anymore, and having to sell. What's your thoughts on that, Carmelo? Like, do you have any comments about that?
Everything's accurate. The one thing I like to also add with real estate is it's a protection to inflation. Inflation is
Yes.
price, everything in prices go up. So does real estate. And again, this we're talking about long term, not short term, right? So real estate is a good protection for inflation long term. And as you're
Yeah.
looking to invest in real estate, you got to be thinking long term investments, right? If you're looking at buying a home to flip, one thing, but down the road, inflation, real estate is a good inflation hedge. Owning real estate is a good hedge to inflation.
Yeah. And yeah, I mean, like there are, opportunities to do things like, purchase a property to repair it and flip it. And that's not really as much of an investment. It's basically just like a short-term kind of gain flip, and you have to really know what you're doing. You have to buy a property at a certain very appealing price point. This works well for somebody that maybe if they have like a renovation company or they can do the work at cost. But for the most part, it's challenging to find those properties to just flip. Or like sometimes I see people that want to buy pre-construction with the intention of assigning that property before closing and never actually closing on the property. Well, that's where a lot of people find themselves in trouble today because, assignment sales are something that there's a lot of them available right now. They can't be listed on the MLS, and a lot of people are walking away even from their deposits. They're selling at a loss, and still people don't want to buy it. So, that's things that are like buying like that. That's more gambling than investing. And the last thing is real estate is a tax shelter. So it's basically like a business. So like there's expenses, and you can write off those expenses. You can even write off your interest on your mortgage. So talk to an accountant about all of that to verify it, but there's ways to really kind of shelter your money. Here's some information about the GTA. I know this presentation is about Alberta, but this is just something I want to show you, like what is happening in our market today. So you can see these are the four main property types: condos, condo townhouses, freehold townhouses, and detached homes. So you can see that, over the last 23 years, there's been a substantial growth. In the year 2000, the average detached home looks like it was about maybe $200,000. Today, the average detached home in the GTA is over 1.3 million. So, this is what we've seen in Toronto as a city have grown. We've seen similar results in cities like Vancouver, and we're seeing something like this in Calgary as well. Just because so many people are moving out there. But, I guess the first thing I want to talk about is an investment property that I purchased in Calgary in pre-construction through Truman Homes in 2022, and kind of how I analyzed that and why I decided that this was the right choice for me. So before I was buying this property, I was actually looking at buying another property in Ontario. There was a bidding war. The house was located in a place called Midland, which is about 2 hours north of Toronto. There was a bidding war. We would have barely broken even, or I would have barely broken even on that property. Had I wanted, probably actually I'll be cash flow negative every month. And then I found out about an opportunity in Alberta, and I went with it, and it did well. And then in November 2022, I was looking to invest again. And through my brokerage, I had a strong connection with a top team that sells Truman Homes properties, and it made sense for me to buy pre-construction because of, I just had some money I wanted to invest, and this is not something I would need to close on for the next 5 years after buying it, and I was looking for that appreciation. Sorry, Carmelo, are you looking to jump in there with something?
No, sorry, Alex.
I don't see your screen, so I just basically just like looking at his PowerPoint slide. So I thought I heard something. But anyway, so this is a property that I bought in Calgary. It's in a condo called the Broward. The builder is Truman Homes. The purchase price was $440,000, including parking and a locker. This property required a 10% deposit over the course of a year, so I finished doing that. The closing is anticipated to be in 2027. Anytime you get a closing date on a pre-construction property, though, it's a little bit, there's some up and down. It may close a little bit earlier, it may close later. This property does include a rental guarantee, which I felt was very nice. So basically, whether I have a tenant in there or I don't have a tenant in there, I get this rental guarantee for the first 2 years, and that rental guarantee is about $2,200. I also get free property management. So all these kind of incentives, the lower deposit, the rental guarantee, the free property management, these are all things that kind of made sense to me. And also, at this point, I've seen already kind of the boom just from like watching the news and knowing people that have moved out to Alberta. So, I can kind of see the writing on the wall that, it was becoming Canada's next top market together with Toronto, Vancouver, and Montreal. There's also a lot of really favorable terms that I'll get into a little bit later. But this is basically, kind of the meat and potatoes of this presentation. That's my analysis of buying a condo in Toronto versus buying a condo in Calgary. So when I was doing this analysis, I wanted to find something that was as similar as possible. So I found this project on Livable, which is a condo complex called Queen Church, located at Queen and Church in downtown Toronto. It was a pre-construction at that point. I believe it's also going to be closing around 2027, 2028. And this is a little bit about this project, right? So units started from 700,000 and went up to over 1.3 million. This project was going to have 445 units ranging from 1 to 3 bedrooms. And, kind of the entry level unit that I believe is comparable to my purchase at the Broward ran for about 775,000. So that was a 1 bedroom, about 480 square foot condo, 1 bath. I didn't include parking. If I wanted to buy parking, that would be an extra cost of 125,000. And in fact, to buy parking, I would need to buy a 3 bedroom unit. So this one wasn't even eligible. And in order to get into this property over 450 days, I would need to make a 20% deposit, which is going to be about 150K. It was priced at about $1,600 per square foot, which is in line with even what we're seeing today in pre-construction in the GTA. So, this will be something that will be quite challenging for me to get into. I don't have $160,000 lying around to put as a deposit. So definitely wasn't going to be something I will be able to consider, but the project at the Broward was something that was affordable and something I could consider. So this is that. This is a little bit dated. So this is from Q4 2023. But, if I wanted to rent out that 1 bedroom condo, based on this, I'd be able to get about $2,500 a month. But this data is for all condo properties. And in fact, for those that don't know, there is rent control in Ontario. So this condo wouldn't have rent control. And as much as it's a newer unit, actually demand for it would be less because tenants are more and more educated these days, and they're seeking out units that do have rent control. So, as much as the numbers that I'll use for this comparison is $2,500 for that rent, for that condo at Queen Church, probably, today the rent would be lower, but in, 5 years, it would definitely be higher. But I think that I'm actually going to be even overstating a little bit the type of rent that I anticipate to be able to get with that property, which will skew the numbers even more. Does that make sense so far, Carmelo?
No, it's true. Like rent is changing, right? And in the short term, is the rents are, in the short term, there's like the flood of these investors, selling and flooding the market. And then, like you said, also I noticed too, a lot of renters are getting more savvy and understanding. Hey, with the interest rates increasing a lot over the last 2 years, they got the notice. Yeah. Your rents rents wasn't going up by the amount of rent control. The rent went up by $300-400, which was something that's like, whoa! Exactly. How do you prepare for that? So, yeah,
and there's been a decline in rents in the GTA as well, compared to this time last year, because this time last year it was pretty crazy. Like people were all moving back into the GTA. There was a shortage of units, but now there's also been a lot of condo projects that have come online. A lot of these pre-construction projects, so that has kind of held rent down, because most pre-construction, the end user, like the person who's buying it, is not buying it to live in there. They're buying it to rent it out, at least for the first couple of years. So anyway, so that's the numbers. And this is just some numbers from Rent Faster about kind of Calgary's rent numbers. And the reason why I'm showing all these rent numbers is because I'm going to show you my cash flow analysis for the two properties and how they compare. But basically in February 2024, average rent for a 1 bedroom in Calgary was just over $2,000. So it's actually not that far off. But anyways, this is the unit that I ended up buying at the Broward. So it was, like I mentioned, about a 1-bedroom condo. This is a small boutique building that has 6 stories. It's right in the heart of downtown Calgary. It's like about a 5-10 minute walk from the Calgary Tower, kind of in an area called, I think it's called like the Golden Mile or the Red Mile, sorry. So it's, prominent. It's about $800 a square foot, which is half of what pre-construction properties in the GTA are. And, with this unit, I was able to get parking and a locker included for free, where that Queen Church condo, I wouldn't be able to even buy it because it was that 1-bedroom units are not eligible. And if I had a 3-bedroom unit, parking would be $125,000, which is like a quarter of what this condo costs. So pretty crazy. But yeah, here's some of the perks and kind of the incentives and things that made me go with this purchase. So it was only 10% down compared to 20% with Queen Church. On free underground parking, free storage locker, 2-year rental guarantee. So this is incredibly important. Basically, from interim occupancy, from when I'm supposed to take possession of this unit, I get a rental guarantee from Truman Homes. So whether I have a tenant in there right away or not, I'm getting $2,200 a month. It included 2 years of turnkey professional property management services from Empire 81, which is nice to have. But, one of the great things about buying a condo is it's like not that many things can go wrong there. So, I don't know. Like, I think after the 2-year rental guarantee and this property management is done, I may just self-manage because, like, what can really happen? I need a plumber, find a plumber on Google and send them over there, right? Also, this unit included 2 years, no condo fees, which was very appealing. Free assignments, so there's no fees for assignment. In the GTA, not every developer allows assignments. And if they do, there's usually a fee for it. And there's a free hassle-free exit on the MLS. So after closing, after the 2-year rental guarantee, if I want to sell this property, there was a incentive that I will be getting if I used one of their agents to list my property for me. Because as an agent in Toronto, I can sell pre-construction in Calgary, but I can't do resale in Alberta. So yeah, that's a little bit about that. So you can see the floor plan, everything's a little bit similar. Like that Queen Church was, that Queen Church was about 480 square feet. This one's 488 square feet, so a little bit big. So yeah, and this is just from my purchase agreement. So you can see it was stated right in my purchase agreement, my rental guarantee there, $2,200, like 50 cents short of that. Property management company, so it's all there. In writing. So here's a little bit about kind of the breakdown, right? So Queen Church, the purchase price was $775,000. What does that mean? That means my down payment would need to be 20%. And a 20% down payment, it would be $155,000. Is that correct? Yeah, it is correct. Actually, no, that's not even correct.
No.
That's not, right?
No.
Oh no, it is correct. It is correct. My down payment will be $155,000. My down payment for Broward is incorrect because it states it as a 20% down payment.
It's your deposit is different on the Browers, and now your deposit is 10%. But because it's an investment property, you do have to put 20% down payment. So that 20% down payment, $88,000 is correct, but your deposit is different. You have that listed, so I'll let you continue.
Sorry, just a long day. But anyways, so the deposit, you can see the deposit is a lot different. So like with Broward, I would need to make a $44,000 deposit in 365 days. With Queen Church, it'll be $155,000. The maintenance fees in the Broward are less as well. $229 versus $389. All the extras that I get, the free parking, the property management hassle, the free assignments, none of that was included with Queen Church, only with Broward. So basically, if I kind of projected the rent, so let's say, Queen Church today, the rent is $2,500, let's say, which is quite liberal. Let's anticipate it kind of goes up at the rate that it does in 2027. I'd maybe be getting $3,200 a month for that property, minus my mortgage payments, minus my property tax, minus my condo fees, minus my landlord insurance. I'll be at least $1,000 in the hole for Queen Church. Whereas with the Broward, when you include that free no condo fee promotion, I'm up $133. And even if you remove that, I would only be maybe $100 out of pocket. So like, that's not terrible at all, because one thing I'm not accounting for here is that every time my tenant makes a rent payment, that goes towards paying my mortgage. So, and substantially, right? So like if it would start probably at about $800 a month towards my mortgage principal, and that would just go up more and more as I pay the mortgage more. So, this is kind of the difference, right? Like we're talking about at least $1,000 a month difference. And while the GTA is a great market to invest for appreciation and a highly in demand market, paying $1,000 out of pocket was not something that was affordable for me or is affordable for most investors. This is more for those kind of, I guess it's the investors that have that money, which I don't. And, not to mention just that in Alberta, there's no land transfer tax. There's no municipal land transfer tax. There's no provincial land transfer tax. It's just legal costs, right? Which is about $1,500.
Alex, I love this slide because, again, this slide reminds me so much about Rich Dad Poor Dad. And the theme in that book is, an asset is something that's putting money into your account. Something's taking if an asset's taking money out of your bank account, it's called a liability. So with this example, property in Alberta, you look at it, it's going to bring money into your account. That's an asset. Toronto property, if you got to pay $900, that's a liability now, regardless of the fact that it may appreciate a little faster.
Yeah.
And the portion of your payment is going towards principal, but
exactly. Like you have some life-changing event, you lose your job, something happens, and you can't come up with this $1,000 a month out of pocket. You're going to be looking to sell pretty quickly, and then you're going to be in a situation where you have to sell in maybe a market that's not favorable to you. And and also this analysis, I'm basing it based on the rental guarantee in Calgary of $2,200. If the market rent is above that in 2027, which if today it's already over $2,000 a month for a one-bedroom condo, and this is a one-bedroom condo in a prime downtown location, it would be a premium. I don't have to use the rental guarantee. Like if the market rent is $2,400, I can just say, I don't want your rental guarantee. I'll just, get a realtor out there to find me a tenant, pay them a month's rent, and, collect more about that. And also just these land transfer taxes. Like Carmelo, what would be a land transfer tax in the GTA? Like if you know off the top of your head, roughly, like for like a $780,000 condo. Like I think it would be at least $30,000, $40,000 for in land transfer tax.
Is this going to be for an investment property or owner occupied?
Well, I'm doing
investment. So it's an investment property. So as an investment property, you don't get, even if it's your first home, you don't get that land transfer tax credit. So the land transfer tax in Toronto, because there's the provincial land transfer tax, and Toronto has its own city land transfer tax. It comes to $23,950. That's a lot of money.
Together?
No, it's combined.
Together, right? Combined.
Yeah. So if you're buying that property.
Yeah. Plus you need to come up with $1,000 every month in pocket. Plus you need $1,000 out of pocket every month just to carry the property.
Yeah.
Crazy, right? Do the math and see what it costs you over 5 years.
That $24,000, if you look at it compared to the Briar, you could have your mortgage $24,000 lower, a lower payment, and even higher cash flow.
Exactly. So this is why it made sense for me, right? It just and again, just like to reiterate some of these perks that I got, which, I know in Toronto right now, there are some developers that are starting to offer some perks, but it's not like free parking in a locker. It may be a discount rate to buy a parking in a locker. Instead of $120,000, it's $80,000. But, like all the things that I got at the Broward, like the pre-assignment, the suite upgrades, the parking, like this is what drew me, right? And of course, before I did this, I did some research on the city of Calgary as well. And this is just some information from the Calgary Real Estate Board. This kind of shows you where property prices are. In Toronto right now, in the GTA, we're seeing, especially in some property categories, a correction. Maybe prices are a little bit less than they were last year, especially in the condo sector. But look how everything is going in Calgary. Like basically citywide, no matter where you go, to the northeast, to the north, to the south, or to the city core, there's there's growth in prices, and this is because of migration. Because, people that are moving into Calgary, most of them are coming from other parts of Canada. And the reason why they're moving out there is just because of the affordable housing. So, even in the, this housing market summary, you can see that freehold townhomes, condo apartments in the GTA prices decreased compared to this time last year. While in Calgary, all property types have increased and have gone up. This is the population growth. Like, you can see that the average income in Calgary is actually above the average income in Toronto, in Vancouver, the BC average income, Canadian average income. Calgary has one of the highest incomes and one of the highest growth rates of population. That's why people are coming out there. Higher wages. The province has diversified substantially outside of oil and energy. You can buy a property in Calgary. You're beside the Rockies. The climate is actually quite good. Like, I know Alberta has a bad reputation. I didn't experience that. Like, it's basically like the climate there seems to be quite similar to the climate that we have in Ontario. It's the top 10 cities globally as per, like this article, this release in Global News. It's the sunniest city in Canada, close proximity to Rocky Mountains and Banff. It's one of the most livable cities in the world, one of the most affordable. And you can see through these, population projections that, the growth is anticipated to continue. And in 2043, Alberta will be on pace to, match the population growth of British Columbia. So, very quickly we'll see Calgary continuing, continuing this growth.
A lot of people are is looking at Calgary, and I look at Calgary as well, Alex. So every time we talk about it, is again, it is the incomes are that you could get a comparable income salary in Calgary, but if you're the biggest cost of living is housing, and if you could reduce that cost by half, all of a sudden it changes lifestyle, it changes mindset, and it changes happiness.
It changes everything. I mean, it's like people can go from, having a, living family of 4 in a 2-bedroom condo to living in a 3-bedroom detached house.
Yes.
With a backyard, So that's what it is. But I mean, it's all supply and demand though, right? And it's like people are moving out, their prices are increasing very rapidly as well, right? So this is why I think that this is, a great opportunity for somebody who's looking to invest in real estate, or if somebody's looking to relocate, right? Like, I think it's a great place. But because of those higher incomes, and because there's tons of companies that are moving out there, software companies, this is just some of the headlines, right? Companies like WestJet making its Calgary's global hub, TELUS creating 8,500 new jobs in Alberta. These software companies, RBC bringing 300 jobs to Alberta. Like, that's all, these are high-paying, high-skilled jobs that are moving out there, and people can, of course, as they move out there, they're going to be competing for these properties, right? So supply and demand is going to go up. But another thing that made it really appealing for me to invest out in Alberta, and why I may not potentially invest in Ontario, at least for the foreseeable future, at least at single-family properties. Like, I may be looking to do things like short-term rentals, but not anything that's governed by the Landlord Tenancy Act, is that Ontario is not really a favorable market to be a landlord. If you look at Alberta and Ontario has rent control. Alberta has no rent control. What it means is that a landlord can increase the rent to market rent whenever they want, or to whatever rent they want. Because in Alberta, fixed-term tenancies, they end. So if you have a 1-year lease with your tenant, after 1 year, the tenancy is done. It doesn't go month to month in this thing where, like, you need to, if you want to sell your property, you need to say your mom has to move in or something. It's the tenancy ends at the end of the year, and then you can renegotiate, you can sign a new lease under new terms. In Alberta, security deposits, pet deposits, these are things that are permitted. In Ontario, they're not. In Alberta, pet provisions are permitted. So if you say that you don't permit dogs in your unit and the tenant lives in the unit with a dog, you can deal with it more effectively. I'm not saying kick the person out, you can, but that's not, necessarily maybe a good route to take, but it really depends on the situation. I mean, you just ultimately have more control. So you want to have, you don't want to be kind of like almost held hostage by a bad tenant. And Alberta doesn't have those same restrictions in Ontario. Like, it's not good when landlords take advantage of tenants in Ontario, or in any market, but I believe that most landlords, probably 99.9% of them, are good people that want to just, create, investments for themselves and build a future for themselves and their family. They're not looking to screw over tenants or have, 10 people living in a 2-bedroom house or something like that, renting by the bed. But, unfortunately, these things do happen. So in Ontario, just like the whole residential tenancy board or the landlord tenant board is very slow in moving, very slow to act, very slow to protect tenants, very slow to protect landlords as well. In Alberta, they don't have those constraints. The average wait times to get a hearing are between 14 and 28 days. In Ontario, it's between 8 to 10 months. So just the whole environment is more favorable. So you get more affordable properties. You have high quality tenants, higher wages, and the more favorable residential tenancy act. So just these are all the things that made me decide that I wanted to invest out there. And I'm happy I did, because after I bought this unit, quickly the Broward has sold out. But there are other opportunities that are available. I mean, these are just some of the condo opportunities. I mean, you can see that there are projects like Violet that are starting at $350,000. There's projects in downtown Calgary like Lincoln condos, Clover, as well in Northwest Calgary, which is selling very aggressively. We also have freehold properties as well. Like if you're looking to buy a house or a duplex or a freehold townhouse, there's those opportunities as well, and at higher price points. But yeah, there's good opportunities for anybody that wants to kind of jump in as well. So if you have any questions about that, or you want to know what's available, feel free to reach out on social media.
Now, Alex,